He's David Owen, Chief European Financial Economist at Jefferies International. David, thanks very much for coming in. Good to see you again.
Yeah.
So what do you make of this? We're looking at an additional $6 billion, though that could actually rise by another $5 billion on top of that if there are unexpected losses.
Well, the numbers just keep moving so quickly. So what I'd be interested to see is, what estimates of things like outstanding government debt GDP ratio is going to be going forwards. Obviously, all these injections and so forth will be of interest to the markets today. But the key thing is, where is government debt GDP in Ireland going to be on a sort of 2-3 year view? There was really looking very likely that this ratio would get to around about 100% over the course of the next 2 years. I think people will obviously be revising up these numbers on the back of this sort of information.
And what is that going to mean for the economy in Ireland? Well,
Ireland needs growth, and the problem is, of course, that Ireland is stuck in recession, and at this level of the euro, it's been posing, I think, a real problem for the Irish economy. We saw in the second quarter that Irish imports actually surged very strongly, and if the euro had carried on rising, I think it would have ultimately not crushed the Irish economy entirely, but it made it very difficult for it to recover at all. So these debt dynamics would have simply got worse and worse and worse.
Now, we have had this announcement. We were expecting this announcement ahead of the market opening this morning. We've got, what, an hour and 15 minutes to go. And I understand that you were in Ireland just yesterday.
Yes.
Is that correct?
Yeah.
What was the mood amongst business people, investors that you were speaking to?
Well, I was seeing investors. I mean, the economy is clearly in recession, and I think no one thinks there's any clear, fix here that it's going to be a multi-year workout. So what they do need is some policy response, and obviously the ECB buying more bonds would be helpful, but also at the end of the day, the system needs a much weaker euro. But let's be clear, no one thinks that there's any easy escape from these problems.
You said the system needs a weaker euro. Is that likely to happen anytime soon?
Well, I mean, if it continues falling as it's been doing first thing on opening today, that would be very great news. I mean, the problem is that every single region needs a weaker currency, but the Eurozone clearly needs a much, much weaker euro.
Can the country afford a bailout on this scale?
Well, that's the interesting dynamic, can it? And at these levels of interest rates, market interest rates, can be very difficult for Ireland to probably finance itself, roll itself over going forward. So ultimately, it may be forced to tap the bailout fund. I mean, that's ultimately where we may be going in Ireland's case.
So do you think it is possible that they're not going to be able to get through this without help from the EU or the IMF?
Absolutely, it's quite possible indeed. You've got Ireland, you've got Portugal, and Spain is obviously being sort of ring-fenced at the moment, but Spain's also got major sort of macro imbalances which still yet to have fully unwound. It's got property problems and so forth. So it's not in Ireland's position, but clearly it's also got problems. Now,
Ireland's cost of borrowing was again at near record levels yesterday. What needs to happen for calm to be restored to the debt markets? Well,
I think in all these economists' cases, you need sort of understanding that the economy is actually expanding. And it was interesting that even though those Q2 GDP figures could have been a lot worse in Ireland's case, I mean, GDP was down 1.2% on the quarter, following a 2.2% rise in Q1. The markets obviously took that very badly, and I think the general view is that Ireland's in recession. It's doing all this fiscal austerity. It's got all the problems with the banking sector, which is ongoing. The government debt GDP dynamics continue to worsen. The numbers keep getting revised up. But Ireland just needs a weaker exchange rate. It's a very, very open economy. It needs the US economy to do well and the UK to do well because of the trade links, and hopefully on a sort of 2 to 3 year view, slowly but surely it recovers. But this is not going to be over in the next week or so. Great to get your thoughts. Thanks very much for coming in. David Owen, Chief European Economist at Jefferies International. Yeah.